So this is Steve Perry with Edge Home Finance, and I'm Keena Nisley with Team K Squared of Keller Williams, and we are going to talk about VA loans today. So I know people PCS here. What documents? Do they still need to keep hard documents out and move with, or what do they need to take the first step for a VA loan?
Yeah, so it's actually better to send digital versions because with the PCS, everything's boxed up. It's hard to keep track of all of it. So it's better to send just digital versions of everything. But really, the three things we need to get everything started is a copy of your driver's license or any photo ID, last month's LES, and then 2 years of W-2s. Those three things get everything we need info-wise, and we take that and pull your COE and get everything started. So.
Okay. Now, what about credit score? I keep hearing, I don't know if my credit score is high enough. Does the VA need what type of credit score do you need for a VA loan?
Yeah, so the absolute lowest we can go, we have a few lenders we work with that can go down to 580. What we like to see is 740 because that's when you're going to get the best interest rates that all the lenders are going to have on offer. But anything over 690, you're going to have no problem getting approved. And then 580 is the absolute bare minimum. So.
Okay, so say I go on Credit Karma and I look at my credit score there and it's 580. Is that the same one that's going to get pulled from our mortgage credit score, or are they different?
Possibly. I honestly, I don't know. Like, you probably got that. I don't know much about credit scores. I don't think anybody knows much about credit scores. It's kind of like a black box. But those are usually pretty close.
Okay.
So it's a good starting point.
Yeah, so download Credit Karma, watch your credit scores.
Yeah.
Okay, so we could do it with a 580. Now, what would be my interest rate difference if I had a 580 versus a 740?
Yeah, it's really not huge difference. They're pretty similar. I'd say half a percentage point between 580 to 690. There's just different rules with the debt to income ratio if you're below 690. That's why we like to see 690 or above, because they'll approve you for more. So you'll be able to, especially PCSing out here.
Yeah.
You're gonna need I don't know if I should say that. You're gonna need to be pre-approved for more.
Yes. Our average price point, I believe it's still a little over $1 million. Doesn't mean we can't get houses
for single family.
Yes, it doesn't mean we can't get houses in the 800s, 900s or condos in the 600s, so they are out there.
Yeah.
Okay, so we talk about debt to income ratio. What does that mean, and how high can it be? And how does somebody know what their DTI is?
Yeah, so debt to income ratio is in the name. It's your total debt, total income compared to your total debt that you pay every month. So when you get qualified, you're really getting pre-approved for a total monthly payment that the lender is willing to let you pay. So with that's one of the big benefits of the VA loan is that you can, as long as you're above 690 on your credit score, you can use more of your income, a bigger percentage of your income to qualify. So for a VA, you can go up to 60% of your total income you can use to put towards debt every month. So 60% of your income.
Does that include the house payment of the new house you're buying? So you're going to take that into account also, and any credit card debt or car payments or child support.
Right.
That's the biggest one that sneaks up on us.
Yeah. No one ever wants to talk about that one.
I know, but it is a debt. If you're paying child support, it's a debt.
Yeah. But yeah, so that's the total debt. So that's your back end DTI is total housing expense, car payment, student loans, child support, everything else, credit card debt.
Okay.
60% of your total monthly income.
Okay,
Yeah.
and we can help you by letting you know what is your BAH here. We did get a slight increase, but then I think they took away a little bit of the COLA. So you can just give us a call, and we can kind of help you figure out where you are and maybe what you can get qualified for. So we know the steps. They have to turn in some documents, get pre-approved. It's always best to be pre-approved before we go shopping. And then what about buildings? If we're looking at condos and they're not VA approved, can you do a spot approval on those? And what's the process of doing those?
Yeah, so that's kind of we handle most of that. If that situation does pop up, we can get single condos approved in a building. It's just a lot more legwork on our end, but we've made it happen before. So it's preferred that it's VA approved off the bat because it's less work for me. But
Yes.
we
And
can
there is
still
a
make it
website
happen.
that we can ask Steve to look at and see if it's VA approved. I'm sure I could look too, I just don't know how, and it's easier to text Steve. Because he'll
I'm here
tell
for.
us. So what about, would you always recommend people use their VA loan, or is sometimes FHA a better option, or is conventional ever a better option, or?
No, I mean VA is the best loan program you can use. The 0% down, can't beat that.
Yeah.
The debt to income ratio, like I mentioned earlier, it has the highest debt to income ratio
Oh, okay.
of any other program also. And then the credit score also. FHA matches VA, but for a conventional loan, nobody's going to give you a loan if your credit score is around 580 or above. Really, anything below 690, they kind of
Push
get
you.
scared of.
Yeah.
So.
Okay, so what if I
Oh, and
need?
then
Go
so,
ahead.
and also best interest rates than any other loan program.
Oh, yes, definitely.
About
I
half a
looked-
percent
yes,
to a percent
yesterday
lower
it was a
than-
little more than a 0.5%.
Yeah, yeah.
I
great.
didn't look today.
Yeah.
I just couldn't take it. So
I don't like the
I
look
don't.
of
I
these
try not to look
It's rough.
every day. Okay, so say I need a cosigner, and my dad, who's not been in the military, will co-sign for me. What happens then? Is there anything special I'll need to do?
Nothing special. You just add him as a co-borrower on the loan. If you have two VA approved, or excuse me, VA eligible borrowers, there's no change. They use split entitlement, and there's no change to the process. If you do have a co-borrower that's not VA eligible, it adds a 12.5% down payment.
Okay.
So you can't take advantage of the 0% down, but it's still beneficial
Yeah,
based on all the other
12.5%.
right,
And is that of the whole amount, or just the
of the
of
purchase price.
just of the
Yeah.
purchase price?
Yeah,
Okay.
so 12.5 down of the purchase price, but again, you can go use the higher debt to income ratio, lower interest rates, so it still makes it worth
It's
it.
still a better deal.
Right.
All right. Anything else people should know about VA loans?
VA loans, so you only need to be in the Army or really any military branch
Yeah.
for
Even
90.
reservist,
Yeah.
right? Coast Guard, reservist,
Yeah. National Guard.
National
anybody.
Guard.
The only
and- yeah.
the only stipulation is that you have to be in for 90 days before you're eligible to use it. So essentially, if you finish basic training
Yeah.
and your initial MOS training, AIT for the Army, I'm sure other branches call it something else. Once that's done, you'll be able to use your VA loan at your first duty station, right when
Wow.
you PCS.
So that's great. So we do recommend. Now, can you use it more than once?
Yes, you can. That's a huge
I
myth
know.
that everybody,
I know.
everybody thinks I'm going to save it till I find my dream house. I'm going to
Yes.
use it on that. That's not true at all. You can use it as many times as you like. The only rule around that is you have to intend to live in the house for 1 year, the first year that you own it.
And you do have to occupy within 60 days.
Right, yes.
So yes. And then can I keep, if I bought a house and I want to keep it as a rental, can I still use my VA loan again?
Yeah, so there's a couple options. You can either refinance out of the VA loan into a conventional loan and then reuse your VA loan that way. Or there's also limits by county that you can buy a second property with your same VA loan. It just varies how much entitlement you still have.
Yeah. So
based on the
say
county
you
live
bought
in,
one
but
in Texas for $250,000. Our ceiling here is $1 million.
It's almost 1.2.
Yeah.
Right around
wow,
there.
it went
Yeah.
up. So our ceiling's 1.2. So if you say you bought something for $250,000, you could still come here and buy something for $950
Yeah.
using your same entitlement.
Right.
So, but yeah, so I always encourage our VA buyers to keep it if they can. It's not always possible in Hawaii. Our rents don't always match our payments. And then there are assumptions, but we won't talk about those with Steve because those are kind of cutting our lenders out. But we'll talk about a
we don't
video
like
on
that.
assumptions. I know. I
No,
have
they're-
4 right now.
Yeah, they're great. Assumptions.
Yes.
It's too bad you have to make up that difference in cash because it's.
I know.
Right now would be the perfect time.
And
for
find
people
somebody,
to-
find
yeah.
the cash for the second, or
Right.
someone needs to create a lender that will loan on a second. at some
Yeah, like
astronomical
a bridge
rate.
loan.
Yeah.
Yeah.
I'm surprised you guys haven't started bridge loans for those assumptions,
Yeah.
just so you guys can tap into that market.
I know, we need to.
Yeah, let's
I need
do
to,
that.
yeah. I agree.
All right. Well, thank you so much. Thank you, Steve.
Yeah, absolutely.
This has
Thanks
been
for having
great.
me.
This is Kina with Dean K. Keller Williams. Subscribe to our channel if you are going to PCS to Hawaii.